Welcome back. You're watching the Steve Malzberg Show, and I'm Bill Tucker filling in for Steve. Earlier today at noon, I spoke with noted economist Peter Morici. We began by talking about a possible hike in interest rates as promised by Fed Chief Janet Yellen.
That the evidence we've seen since we met in November is consistent with our expectation of strengthening growth and improving labor market, inflation moving up. So we indicated that the case had strengthened for an increase in the federal funds rate, and to my mind, the evidence we've seen since that time remains consistent with the judgment the committee reached in November.
All right, Mr. Morici, explain to me what you and Ms. Yellen see that I don't see in terms of strength in the economy. Why do you think it's a good time to hike interest rates?
Well, interest rates have been low for too long, and it encourages a lot of speculation and a lot of asset bubbling. For example, real estate in New York City and in San Francisco and so forth. At the same time, we can certainly bear somewhat higher interest rates. I mean, you know, inflation's running at better than 2% a year now. The core rate was up 2.2 year over year. And there's no reason why we can't have interest rates at 2 to 3%. I wouldn't jump them there overnight. But certainly, we've had interest rates at 3 and 4%, and the economy has been healthy. Setting a price of zero for anything encourages its overuse. And among wealthy people, they're borrowing too much.
Well, and among wealthy companies, they're borrowing a lot as well. I don't know, but
right.
But there is an argument that says if you start raising interest rates, what you're going to get is you're going to get an economy that's somewhat stymied in terms of growth, and while you're getting inflation encouraged by the higher cost of money, and it's a situation which is called stagflation. Is there any concern in your analysis that we're anywhere remotely close to that concern?
Well, I don't buy the notion that higher interest rates give you stagflation. One of the reasons for raising interest rates is that inflation is heating up. And so, you know, wages are rising and things of that nature, which is true. It is starting to heat up. You know, you got to get ahead of inflation. If you wait till it's where you don't want it to be, then it takes off and goes on a life of its own. So I'm not particularly concerned that raising rates by a percentage point over the next 2 years is going to do much harm at all. In fact, with Donald Trump coming in and all the spending he wants to do, long rates are going to go up on their own. It's just a matter of keeping short rates where they belong as well.
Yeah, it's interesting to me, and I guess my reservation, just personal, is that you're right. Interest rates have been at zero for so long. And the argument against me is if you look around the world, interest rates in other countries have been at zero. And in some countries, in fact, we're looking at, like Japan, we're looking at negative interest rates. So clearly this policy really isn't bearing much fruit. We're not really getting anywhere. So maybe you're right. And I have to
if you have a vitamin D deficiency and I give you 2,000 units a day, you get healthier. If I give you 10,000 units a day, it taxes your liver. That's what's going on in Europe with negative interest rates. In Japan, if interest rates are too low, it starts to weaken the banks. And that's exactly what's happened. That's part of Deutsche Bank's problem, for example. And you can, you know, it's a funny thing. You know, you can have a financial crisis if you drive interest rates to negative 2%.
Yeah.
You'll so weaken the banks they can't stand on their own feet.
Fair point. Fair point. I want to go to this concern about Trump in general. There is a perception that he is an anti-globalist. I do not see him as an anti-globalist, but there are people who would refer to Trump as the dawning of a new anti-globalism age because of his concerns about trade agreements. Do you see Donald Trump as president or even as a businessman not being a globalist, in quotes?
Well, let's look at him as a businessman first, because that's where there's a track record. He's investing abroad. He's building hotels abroad and managing them and so forth. That globalization makes sense to him. But he manages that process for his company, and likewise, we need to manage it as a country. You know, we can gain a great deal from globalization, and we can't stop it. No. It's going to happen. The question is how we participate and under what rules. Under the Bush-Obama rules, we've done very badly. Really, the Clinton-Bush-Obama rules, we've done very badly. We've basically given China a free hand in our market while it shuts us out of its markets. As a consequence, we have a $300+ billion trade deficit with China, which costs us about 2.5 million jobs a year. That's dumb. If China won't open its markets, I don't know why our markets are open to China.
That's a fair point. And one of the things that I have emphasized when talking to people is to remember that he's a businessman, because what businessmen and women do is they bargain. They don't walk in, with rare exception, they don't walk into a room, lay down the law, walk out, and expect everything to fall along those lines. They understand that this is a negotiating. Do you think Trump and whoever he appoints as Commerce Secretary are going to be able to successfully reopen these trade agreements, for example, NAFTA, and negotiate better terms? And what's trade in America with the rest of the world likely to look like in his administration, do you think?
Well, let's focus on China rather than Mexico, because that's where the big problem is. And it's not so much a matter of who he appoints to USTR, because that's where the action is, the U.S. Trade Representative's office, but rather the president's willingness to go to the mat with China. Are you willing to call it a currency manipulator? And then if it doesn't respond, are you willing to raise tariffs to bring it to the negotiating table? You know, we're already in trade war. China is closing its markets to us, shaking down our technology companies, subsidizing its exports and so forth. And we haven't joined the battle. So the thing to remember is if you fight back, China's got much more to lose than we do. Their exports exceed our exports in bilateral trade 4-to-1. So when China says, well, if you slap a tariff on us, we'll slap one back on you, that isn't going to solve its problem. The reality is, if we put a tariff on Chinese imports and they put a tariff on U.S. exports, we're going to lose some exports and we're going to pay more for toasters. China, if we put a good tariff on their exports, they're going to have riots in Tiananmen Square, and it's going to be an existential threat to the Communist Party. Trust me.
I think we forget.
President who's willing to go to the mat.
Yeah, I think, Peter, to your point, I think we forget that we hold an enormous amount of leverage in trade with anyone, but especially with China, because in a weird way, I would make the argument that we are responsible for the employment of China because we keep buying their goods.
Right. The other thing is, people will say, well, gee, they hold all that debt. Let's dispel that right now. They hold a lot of U.S. debt, but if they sell those bonds in the open market, they get dollars. Those dollars then go out of circulation, and they have pictures of George Washington, which basically pay no interest. We can turn around, have the Fed print new dollars, buy up those bonds, and the net effect on the money supply and the exchange rate's the same, except that we don't have to pay them interest anymore. They have no leverage.
Peter, I will have to say it makes a lot of sense, but I do have a little bit of concern about spending more money to buy all that debt back.
Well, hold on. This is very important. If they sell our debt, you know, all those bonds they hold, and they put the dollars in the vault, those dollars go out of circulation. So printing money to buy the bonds just
replaces the money, if you will. Listen, Peter, thank you so much. I appreciate your time. It's always good to talk with you. All right, and that does it for tonight's show. Thank you for watching. Everyone have a great weekend, and keep your TV right here. My friend J.D. Hayworth is up next with Newsmax Prime. Don't go away.